What we know is that when rates come down right now, the market tends to float up. The market wants cheap money as long as the US economy is strong. You have a scenario where more and more of these consumer stocks are showing signs of weakness, and that is something that I'm picking up on and kind of extrapolating out and saying, okay, but this is that pivot line that I continue to watch on Bitcoin to give me a sense of which angle has the higher probability of playing out.
Markets are on edge, and Gareth Soloway just revealed a crucial technical setup that could shake Bitcoin and stocks. With a major trend line is in play, will Bitcoin break out or plunge lower? Stay tuned, because Gareth's analysis could make or break your next move.
Listen, wanted to get you guys the information for the day. There are tons of earnings hitting the wires. This means trading opportunities based on technical analysis. All right, so without further delay, let's jump into the chart here. This is the QQQ pre-market, essentially the NASDAQ 100. Let's see what is going on here. You can see that basically we are net positive, right? So we closed yesterday right over here, and after hours, there was a whole bunch of chop. This morning at 4 in the morning, you had a nice push up, and then it's been sideways chop ever since. So again, looks to me like we are setting up for a positive move on the NASDAQ as well as the S&P 500. Now, part of this is basically the 10-year yield. In fact, I would argue that a majority of this, maybe not all, because generally earnings have been okay, but if we look at the daily 10-year yield, the 10-year yield is down. And what do we know about the markets, guys? Again, this is classic understanding of how rates impact the S&P and the NASDAQ. What we know is that when rates come down right now, the market tends to float up. The market wants cheap money as long as the US economy is strong, right? So cheap money means free, at closer to free. The stock market investors, we've been addicted to cheap money for a long, long time. Cheaper money means more money to borrow to go into the stock market, and that's the relationship right there, all right? So again, now we are seeing one thing to take note of, and I gave you guys this yesterday in the game plan. We have a very important trend line right here that we are now kissing. So what this could mean is, and this is going to be pivotal going into Friday and next week, this line break, or do we get the technical support to trigger a bounce? If yields bounce, then you would have to assume inflation could be hotter than expected in the PCE data tomorrow. That's going to come out in the pre-market, and maybe that again that triggers a sell-off as higher rates generally would. All right. In addition, looking at the US dollar real quick, US dollar's down ticking just a little bit. This is helping gold catch a bid this morning, which is nearing its all-time highs. We'll go over that chart in just a minute. But let's get into a lot of these earnings. Yesterday after the bell, Microsoft reporting earnings. This was the daily Microsoft chart going into earnings. This chart to me, what does this show us? This is a flagpole and a flag, right? Sideways inside bar consolidation. So if you know your technical analysis, very simply, this is a sharp down move with a lot of sideways to slightly up chop. That should be bearish, right? Let's see what happened on earnings. And yes, earnings triggering a sell-off, and the stock right now on Microsoft trading at around 421 after closing at around 442 yesterday at the close. So again, this is about a 4% move down. Not a huge move, but for Microsoft, this is a solid one there. And again, if we're looking at tradable levels, I'll show you guys my first and only level right here. Well, it's not the only level, but this is the first one I will be watching, 415.67. There's a gap fill right there. And if it breaks there, your next level is at 410.85. Next up, what do we have? We have Tesla. Tesla, again, coming into earnings. Wasn't down to my target yet, but also a lot of just sideways chop. Tesla getting a bounce in the pre-market off of earnings. You can see initially it flushed yesterday after hours, then recovered. Now, this is an interesting one, guys, right? So check this out. So basically, they missed on earnings. Their numbers were not that great, but Elon Musk said they're going to start growing again in 2025. So far be it from me to say, hey, that if I was a CEO, I'd probably say the same things. Yeah, we're going to grow. We're going to do great in this year. Yeah, last year kind of stunk, but hey, it's going to be a great year coming up. Either way, the markets believe it. That's really all that matters, right? That's really all that matters. And so again, here we have a trending up move on Tesla. In terms of a trading level, there's not much here because we're trading at 406 right now, 406 to 407. If we look at that on this chart, that's right here. It's not even that high, right? All you're doing is going back to where you were basically trading last Friday. And so again, for me to want to trade something, I want to look at a big move that is kind of outside of the norm. And really anything in this range here, right? Anything in this sideways chop, that's all within the norm. If we had flushed down to this 360 level, okay, that's outside of the norm into this technical level. If we had surged up maybe to double top at 439, 440, okay, you're at the high end, that's a short-term double top. But anything in this range is just honestly of no use whatsoever as a day trader. And again, I'm just speaking about myself as a day trader. All right, here's your chart of Meta. Meta was rising up into earnings. I had put this out for members here. This was my key resistance zone, anywhere between 714 and 720. Look at this trend line here, this pivot low, pivot high to high, and that scopes up. And then you have the parallel, right? Perfect parallel line. And those two merged up there. Go to the pre-market action here in the after hours from yesterday. I got to show you this because I'm proud of it and it shows the technicals work, right? So what we have right here is a rally to the upside after an initial drop on Meta. Where does it go? It goes right in between those two lines. Remember, those are the same two lines we just looked at right here that were right up in this range, right? Amazing to see that. What does Meta do? It gets rejected off that and is now chopping sideways. So Meta is still green in the pre-market here, not up by a lot. We're talking about, 1 to 2% type of move. I think, again, they missed on revenue from what I saw. When you have a stock that has rallied up this much going into earnings, and if we go to the weekly chart, look at the rise on this weekly chart. This is a chart or a stock that needs to blow away on all metrics. So it is getting a little bid. I would not be surprised if this fades today at some point, maybe closes flat or slightly negative, just because, again, not only has it been on a long bull run and is really priced to perfection, but also just recently, right? It was just trading at $5.95, and 2 weeks later, here we are trading at $6.95. We're up $100. That's about little under 20%.
Gareth Soloway dives into the pre-market setup, analyzing that the NASDAQ 100 is showing strength, largely influenced by the 10-year yield decline. Lower rates typically push markets higher, fueling investor confidence. However, he's watching a critical trend line that could determine the next big move. Soloway explains how earnings are shaking things up. Microsoft's flag pattern hinted at a breakdown, and that's exactly what happened, with the stock dropping 4%. Tesla's earnings reaction was wild, initially selling off before bouncing. Stay tuned for Gareth's key Bitcoin and market predictions.
Even more, let's go to some of these other big names. Caterpillar reported this morning. Caterpillar had just come off a serious bounce to the upside here. Again, this was on the back of potential good news for the economy and so on and so forth there. And what we see here on a pre-market basis, if my chart would come up, which it doesn't want to, is Caterpillar is down. So again, Caterpillar is down pre-market here. Whirlpool is getting hammered here this morning. All right, we're talking about Whirlpool down over 10%. The kicker here is that Whirlpool, folks, is in a scenario where it is a consumer stock. And this is what I'm very closely paying attention to as we go through here, because Whirlpool itself, what do they sell? They sell big appliances, dishwashers, washing machines, dryers, etc. And not only are we seeing a slowdown in the housing market, which is probably influencing big purchases like this, but it's also people that are upgrading, and they're not upgrading as quickly. And that is a concern there as well. All right. So again, these type of things are in play, and we have to keep an eye on them as we continue through. So you have a scenario where more and more of these consumer stocks are showing signs of weakness. And that is something that I'm picking up on and kind of extrapolating out and saying, okay, we haven't seen the jobs data come out week yet. And we'll get that next week, by the way. We've seen inflation upticking a little bit. The stock market's still staying around all-time highs. But are we seeing the mid-level consumer starting to struggle here? All right. And again, why do I bring that up? Well, the low-end consumer is already getting crushed, right? You have Dollar General. Dollar General, Dollar Tree, all of these stocks have just been getting annihilated. If I bring up my charts again and we just take a look here, we look at this, right? This is Dollar General. I think this is something to watch. I don't think the high-end consumer is hurting yet. So those people buying Rolexes, those people buying those type of things, there's still a lot of demand from the wealth effect of the stock market with people with major investments. But again, these are things that I'm paying very, very close attention to. That chart, yep, there it is. Beautiful. Look at this drop on Comcast. Wow, that's a big drop here in the pre-market for Comcast. So Comcast initially opening higher, pre-market, and then coming down on earnings. And if we flip over to our daily chart on Comcast, first technical level, got to go quite a bit lower. There's a gap fill around 31.30 right down here. 31.30, let's draw a trend line there. That would be first, and then double bottom here at 28.50. Those would be your two key, at least the ones I have, the two key technical support levels. Okay, so again, these are different levels for opportunities. I just want you guys to be ready. Volatility is here to stay. We obviously had a wild Monday. Things have quieted down just a little bit. If we flip back to the spiders and the S&P and go to the pre-market, you can see a little bit of chop here, but generally slightly higher on the day. All right, so the pivot line on Bitcoin right here, guys, see this? And again, let's get over to this. I want to show you guys this. So right here, this trend line, look at how price hit it yesterday, rejected, hit it today. So far it's rejected. This is a major level to watch because again, this is like being on one side of the mountain or the other. If you're on this side of the mountain, the water runs down and you favor that move down. If it's on this side, the water runs in this direction, right? Up into this level. But this is that pivot line that I continue to watch on Bitcoin to give me a sense of which angle has the higher probability of playing out. As of now, it's still favoring the downside, but again, a daily close above would then favor upside to 108 to 111,000.
The charts don't lie, and Gareth Soloway's insights are showing clear warning signs. Big moves are coming, and the markets are at a tipping point. Bitcoin's next breakout or breakdown hinges on this key trend line. If you don't want to miss what happens next, hit like and subscribe. See you in the next one.